Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, April 23, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have what's called in the trading parlance a follow-through day. Remember the big picture. We were looking for the 20-period moving average. Last Friday, they hit the 20-period moving average. Monday, they popped up. And today, we have a follow-through day. So it begs the question, where are they going and what happens next? I'm going to draw out somewhat of a schematic. We did this last night. We're going to do it again because it's a good exercise and a refresher. We have an A leg down from the recent high. They found a low. They're bouncing. This is the B leg. The B leg will bounce up to a place, and my belief is that a C leg will resume. The C leg makes a new low, completing the proverbial ABC corrective pattern. It goes in both directions. In an uptrend, we get a lot of ABC corrections or just simply ABC patterns within the uptrend from pullbacks. Where are they going on this run? Well, I think the first place they run into a heavy area of resistance is around that 509, 510, maybe even up to that trend line, meaning a back test of the trend line up in this neck of the woods, all the way up around 414 or maybe just short of 414. Back above the trend line on daily closes, not just one, but multiples, and I'll have to reassess the ABC corrective pattern until back below if they were to get above the trend line. Is it mandatory that they get up to 509, 510? Could they fall back down tomorrow? Anything is possible. However, frankly, it's too juicy up here with this convergence of moving averages, whether they get into them, they hit the 50-period moving average, which is the blue sloping trend line. Anything up here, my belief is overhead resistance. For those of you interested, we do have and will have waning velocity in the S&P over the next couple of days. Speaking of terms like waning velocity and many more, we're having one hell of an education system going on in the live trading room. Just as a general rule, I'd love to hear from members in the live trading room. How's it going in there? Are you making money? Are you learning? Are you getting educated? Are you learning things that you have never heard of before that make complete sense? I would like to hear about it. Like I like to say, as I like to say, help a brother out. I'm not the brother. All the brothers are the traders out there looking for a solution. They have yet to find the solution. They try different services. They try different trading strategies and techniques. Nothing seems to work. They get frustrated. They've yet to find something they can sink their teeth into. If you think the live trading room is something of a platform where traders get educated and make money on a regular basis, if you're experiencing that phenomenon, let a brother know. Help a brother out. Post it under the video. Social proof. I can talk till I'm blue in the face. Social proof is where it's at. They want to hear from other traders that are having success. It doesn't matter what I say. It matters what you say. If you're a participant and you're so inclined, please post a comment under the video. Now, we're going to switch gears for a moment, and we're going to talk about something a little bit different. We're going to talk about swing trading. Why is that? Because these are the times that swing trades are ripe. Let me explain what happened. So we're talking about the lazy swing trader automagical algo system. In short, what was it doing on the way down? Well, even before on the way down, what was it doing up here? It was taking short positions. We made money in DraftKings, Disney, and others. I showed them to you in here. Then, what was it doing last week on the way down? On the way down, it was buying long positions. What happened this week? The profit targets were taking in the long positions. How does it know? How does it know to reverse course, start buying long positions near the low. How do it know? It's the automagical algo system. Case or cases in point. We got 5 text alerts today. Text and email alerts. We had new entry on the short side in DGX 138.13. Almost reached its first profit target today. About Comcast. Buy alert down here. First profit target today. Base hit. The rest is a risk-free, emotionless trade for the second and or third profit targets. This is just making sure we put money in our pocket, the base hit. And then we had JM Smucker. First profit target today, entry alert last week. How do it know? There's a current list of the closed positions. There's about 24, 25 on this list just that we can see here. And mind you, a lot of these have still remaining second and third price targets open. These are first profit targets in a lot of cases. You could see the gains. You could see that the amount of wins against the losses is 71%. I've already done the math for you. Losses we keep to a minimum. We're going to lose trades. That's the way it is. We lose small and fast when the trade doesn't work out, allowing us to maximize our capital on the gain side. 5% loss, 4%, 6%, 2%, 3.5% or 4%. That's the type of losses in the majority of cases you're going to see with losses. They're just part of the business. And keep in mind, we're already seeing the short trades materialize as the market goes back up, a la DGX today. It's a two-way system. How's it going in the live room today? Anybody make money? Anybody learning anything? Does anybody like being in the live room? Again, post a comment under the video. Help a brother out. Brother and sister. Early on, we had a bull pivot today. We had some unfinished business. We had some lower numbers that we didn't need. And the reason that we don't have to go over that stuff is because the market basically took off, gave a couple of trades along the way, but it was a one-way tape for the most part today. That's not a trader's ideal type of tape, but that's okay. We take what Mrs. Market gives us each and every day. Case in point, 9:15, as long as they're above the pivot, the door is open for 502.65. Beginning of overhead resistance. There's a zone between 502.65 and 504.35. And you'll see in a moment, remember, pause the video, read the notes, go back to the chart and double check the work. There's another number up there in the middle, 503.21 is in the middle, midpoint-ish, it's another number. And frankly, that was the extent of that morning scalp trade where we got them just in this zone, a spike of 503.21. They came down a little bit, and that was it. And the rest of it was history. They just kept going higher. And what I talked about in the live room to members that were willing to and did short 504.35 after this occurred, after the scalp here, there were traders that made money on this short scalp, just a small one. Up here, we said, hey, look, they're eating time off the clock. If they stay above 504.35, they're going to keep going. And the prize today is what? What did I say? I said 506. And that's just simply reading the tape and keeping traders out of trouble. Nothing you can do on somewhat of a one-way tape today with very minimal two-way trading opportunities. We take what Mrs. Market gives us each and every day. 506 was the prize. They spiked it by a few pennies, and that was it. Does anybody want to see why 506 was the prize? Would you like to learn that little lesson that you could take into the future, take on to other charts, other days? Well, we flip over to the daily chart, and we see the last breakdown candle in the sequence. The high is what? 506.22. So why was 506 the prize today? Well, we start with first time, best time. The first time a market hits a really important place, generally speaking, not every time, nothing works 100%, but generally speaking, they're going to have some kind of reaction or at least not be able to blow right on through on the first hit. Hence, first time, best time. 506 was overhead resistance for that reason. Now, why are we bringing up wheat? Most people didn't even know you can trade wheat. I'm going to cut to the chase. We talked about wheat in the live trading room. Once in a while, I give traders a swing trade / even positional trade in the live trading room, something I'm doing, something I'm willing to do with them. I'm looking to hold it for a while. I said, here's where I'm looking to buy wheat. It was right down around here, around 550, in that neighborhood. Told traders what I was doing and why, showed them the chart, showed them how I was playing wheat, what I bought, and where my first profit target's going to be. And no, we're not there yet. We're up nicely on the trade, and we have a lot of participation in the live room. Why? Because I took the time to give a lesson and explain why I was buying wheat, what I expected to happen. We talked through it. We did it over several days. We kept talking about wheat, kept showing the chart. Traders bought wheat in a variety of different ways, and they're getting paid accordingly. Live trading room. How you doing? What are we going to trade next? Lumber? What's going on over in Camp IWM? Same routine as the SPY. They're headed up to the area of the convergence around the 20, 50 period moving average. Where was resistance today? In the vicinity of, the ballpark of, the high area of this breakdown candle. Now, they didn't get to the top, but that doesn't mean they didn't, quote unquote, run a test. They're in the vicinity of the high of a breakdown candle. We're in one of those, it's all the same market right now. The market was all going down together. All the markets were going down together, I should say. And all the markets are going up together, and they'll likely make a turn together. Look back for a second at the spiders and look where the 20 period moving average is. Get above all the moving averages and the trend line, and you're back to the bull case. And what I said before was the ABC would temporarily be off the table if they got back above and stayed above the trend line. Now you look at the IWM, and it's a similar or same case, back above all the moving averages, and the trend is your friend. Just want everybody to realize where we are from a big picture perspective. This is daily chart stuff. Keep in mind, weekly chart, back above the 20-week moving average, and the weekly trend is your friend. Now, intra-week, they can go back and forth. If they close the week above and they stay above, then the weekly trend is back to up. What about the folks down at the transportation department? Into the 200 period moving average or just about today? Same routine. If the markets get another lift higher for another day or so into the convergence of these moving averages, that should coincide, give or take, with the area we looked at in the S&P, the area we looked at in the IWM. Relative strength today in the IWM, relative strength today in the transports. Not a ton, but some. My two favorite market leading indicators, IWM being number one, folks down at the transportation department, number two, but a number one canary in the coal mine. No different conversation in the Qs. I don't know that they will get up to the convergence of those moving averages. However, we can say, and you might want to get out your sticky notes, 430, 431 should be overhead resistance in that neck of the woods. The financials, they were a little bit of a canary in the coal mine. We talked about it yesterday. They were turning around ahead of everything else. Without the financials collapsing, markets unlikely to collapse. Let's take this at face value. They're above all the moving averages on the daily chart. The trend is your friend. There is technically nothing wrong with this tape other than the fact that they can, and we're not projecting they will. We look at both sides. We're the umpire calling balls and strikes, but we're aware that they can put in a lower high, of course. And on the weekly chart, they never even touched the 20-week moving average. So all in all, the financials are strong. It doesn't mean or not mean anything else for any other market. We're just analyzing or assessing the XLF, this chart, this market, this chart alone. We do know if the financials are doing fine, it's unlikely anybody's going to be able to pull the rug out of the market. Smash mouth on a bounce like everything else, same routine. What did they do today? Tested the last breakdown candle high in the sequence. What's the high? 208 even. The high today is above that. It's 208.58. What's the close today? 207.80, below the high of the breakdown candle. First time, best time. Any accidents or coincidences? No, I don't think so. Look at a shorter time frame, 5-minute chart. Look what happened when they got to 208. What's 208? The breakdown candle high. What did they do? They got to 208 and they got rejected. That was a trade. First time, best time. Then they hung around all afternoon, so they may be building energy to move higher tomorrow. However, first time, best time, case in point. Put this on your sticky note material. Tesla had earnings after the market closed today. They're getting a pop after market. So that can't be a negative for anything else, but it doesn't have to be a positive for the overall market, but it certainly can't hurt. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.